Let's go. Our Father who art in heaven, hallowed be thy name. Thy kingdom come, thy will be done on earth as it is in heaven. Give us this day our daily bread and forgive us our debts as we forgive our debtors. Forgive our debtors as we forgive our debts. Forgive us our trespasses as we forgive our trespassors. Forgive our trespassers as we forgive our trespasses. Lead us not into temptation, but deliver us from evil. For thine is the kingdom and the power and the glory forever. Amen. Jesus, in your name I pray for a blessed, holy, sacred, and peaceful day. I pray for a relaxed day, and I pray that I have the strength and the energy to continue to wake up at the time that I need to. And so it is. Thank you. All right, yesterday we did the trading journal template. Today we must make sure that we carefully define what we're looking for here. And I had to think about this, and I'm going to utilize all three time frames, I think. Is it going to be more work? Probably. But I think that if I utilize all three time frames, there's probably a better opportunity here to get a better R multiple, which is what I'm looking for. And that's the only reason why, right? I think you're still going to lose a trade. I think I'm still going to lose trades regardless of whatever I do. Doesn't matter. Just have to position size accurately. All right, let's get up on the other. Still gonna cost money anyway. Start a walk. All right, very simple. Very simple work today. Yep, we already did that. Trading instruments, DB, all that stuff. All right, template update for the playbook. Let's go. Template update. Template update. Notion. Trading playbook. Okay. Right. Indicators using Y. Instrument universe. Okay. That's ChatGPT. What can we do here? Oh, God. All right. Do the subscription. It's a waste of time. All right. Next. Dude, what is up with this? This isn't even the freaking work here. All right, let's go. Let's go. Let's go. Let's go. Let's go. Right. Hold up, hold up, hold up. It is too expensive, honestly. All right. Let's go. Okay, so I just noted the the sections that I want to have for the playbook. Okay, well, while that's doing that, let's go over here. And what I'm looking at here is when price goes to 382, what am I looking for? I have to go down to that 1 hour. There's volume increasing here at the 1 hour. Okay. Now what do I need? Okay, good. That's the candle, right? So if I have even just said, hey, how about we just do this? Can that work too? Can we work with this? And just leave it at that. Can we work with this and just leave it at that? Yes, we could. And we did. We made it to 618. Okay, so 618, that's the extension. We made it there. And then we would have moved our stop to our entry. By that time, okay. Done. Okay, so that's how that could have worked. But even still, did you really need that? Like, did you really, really need all those time frames? No, you didn't. You did not. Even if I were to say, hey, okay, let's enter here at the 1 hour time frame. Still wouldn't have mattered. Still would not have mattered. Unless I would have said, hey, from here, from the topmost, here from the topmost. That's it. And by the time it goes all the way down to the bottom, could have done it too. I still don't see the point. Six keys to a great trading system. Six keys to a great trading system. Six keys to a great trading system. Let's go here. Six keys. Super trader. Good. Okay. Reliability, relative size of profits, average winners compared to average losers, cost of trading, commissions, spreads, execution costs. Okay, so that's where he's talking about exit. Where do you exit? Okay. Trading opportunity, how often the setup appears. Size of the trading capital, whether the account realistically supports the strategy. Well, obviously that's an opportunity. Yeah. Sure. Sure, that's a possibility too. Yeah, and then to know which market environment and which market condition you're in. All right, I don't know why you're saying section D when the template covers the section C as the micro prompt logic. So if anything, it's section C that needs to be updated so that way when I give you the idea for the system, you generate everything so that section D just outputs section C in the correct order. Does that make sense? Question mark. So here is section C, and I want you to update section C then to match what you're saying. Period. I believe all you're going to do is just reprint what's in section C, but just reorder the numbers. And also, we're going to omit screenshots for the system because I will include that at the very top, and then I will bring that all together for you so that you can look at the logic and then help me structure this better. Does that make sense? Period. Here is section C for you to update. Okay, cool. All right, cool. I think this is good. Okay, please re-audit this updated template, period. Do we now officially have all the major sections that we need to address to accurately develop a system that when it's then executed real time in the markets, we have that to rely on, and then we have that to match our individual trade sheets against the actual system, the playbook, to determine where there was drift, if there was drift, etc. Question mark. Yeah, because in this example, let's say if I was gonna go to 1618, right? It should just be very like this: 1, 2, and then 3, or some shit, you know? It's gonna be the simplest thing to do. I don't even know if 1272 is there. Oh, right. Let's see here. Duomo. Ah, there you go. 1272, 1618. There you go. So you have to know where you want to exit then. And then this as well. This is probably not good R, right? You'd need it to be like this. Okay, comparing it. Okay, now from here, I want you to update section A only, and I want to make sure that we have now the updated prompt to match. And basically what you're gonna do is, when I tell you to execute the prompt in section A, I think you already know that you're going to like ask me questions about what kind of trade system do I want to take. So we have that same process like the chat gate period, but we need to make sure for you that you look at the actual screenshots call out block, the screenshots for system, human recorded. Okay, you're gonna look at those screenshots and then I'm gonna tell you the idea of what I'm gonna trade, etc., etc. So basically, like the screenshots for the system is going to be like the visual and the notes section, etc., of how it should look like. And you're going to have to generate section D based off of section C. And then I can go in now and I can review section D myself. And then I can basically just make some updates if I need to, period. We need to ensure that there is a area for a full working procedure so that all I have to do is just read that section and then just execute that section every single time. And I can print out that section myself if I need to. And that all should go in section D, but in the appropriate order. Yep. Sort of a template. Yeah, I personally don't see it any different than just, hey, get to here, and then go down. Do I really want to be stalking the thing? Do I really want to be doing that? Because even still, by that time, that's it. You're done. You missed it. This is the weekend. All right, that's it. It's done now. This is now officially done forever. Just keep going. Keep working it. Keep working. Okay, now what I need you to do for me, please, is I need you to update section B only if it's absolutely necessary. And I also need you to help me create sections under screenshots for system section to basically have as a template of like screenshotting like what the setup looks like, what the exit looks like, what the profit targets look like, etc. Period. Please do that for me. It should only be like a few screenshots maximum. We're not trying to do screenshotting every fucking thing, basically. Just the core essentials of what we need to screenshot so that way I can explain the system as much as possible so you can write the instructions for me, please. And also, too, the instructions have to be as clear as possible, but also as minimal as possible. So if you also need to update your section A, then you need to do that, period. But we are looking for very concise, very clear, very to the point. And I'm thinking maybe like 1 to 2 sentences maximum for each prompt or whatever, you know? Probably. All right, you're gonna have to again re-give me section A then. Thank you, great white brother. Okay. Let's go. Okay, now look this over. Period. I want you to give me the title of this PDF template, and I want you to now audit the whole thing and give it a grade out of 100% by making sure that you first research all of the knowledge files and comparing and saying, okay, all these materials from the Van Tharp are directionally aligned and match what needs to get done for a trading strategy. Go. All right, so then what you need to do is you need to update the formatting in section only and make sure that it's for Notion so that I can just copy and paste. Okay, now, question mark, another audit, period. Is this good to go? Question mark. Formatting good? Question mark. Material that we need to develop a strategy and outline a strategy good? Question mark. Good, done. We're done. We're done. All right, now from here, what you're going to do is you're going to look at the template PDF for the playbook strategy, period. You're going to also look at the second PDF, which contains an outline strategy that we already filled in, which is in section D. Okay, section D is already generated, and it's the 4-hour Duomo strategy, period. What I need you to do is I just need you to regenerate that strategy using the new template. Why on earth would I trust it? Okay. That's pretty good. Let's see this. Let's close out the replay. What? Oh, whatever. Still the same idea. Okay. All right, so that's the strategy regardless. And now let's finish this up here. So now we don't need ChatGPT right now. We just need to do the work. Let's go to the econ calendar. That's already in 1 hour. All right. Could I have seen the reversal happening? Yes, I can right there. That's why you go down to a time frame. That's the only thing I can think of is like, I need to see the price go into close above and then close below and then start taking it. That's about it. But even still, it's the same shit. Okay. Well, that's one trade. Yeah, this is the other one here too. Like if I was really here, what would I be doing, right? Box break, 1, you need 2. Well, that was 2 actually. What are you talking about, right? What are you talking about? That's 2. That's 2. 1, 2. And that's a pretty solid foundation to take you in trend in the opposite direction. So, what would you need? You need your Fibonacci retracement tool. Lock that in. Go down to the lower time frame. And what would you do if you were really doing this? Now, if you want to be extra conservative, you then go down to this level. Could I have seen that low from here? No. Right? Always need to be thinking 1618 at least. At least 1618. Negative, right? Extension. So that's a 1 to 2. Let's see what happens. Right. Would not have gotten stopped out because I have this whole buffer right here. But if I was here, it's a 1 to 5. That's really tight. That's really tight. Okay, so you're gonna then have to go down to the lower time frame then, is basically what it is. Find the low beneath. Find the low previous to the low, basically. If I see these candles, less volume, less volume, less volume, more volume up. There's more volume going up. There's less volume going down. More volume going up. Mm-hmm. Yep. Mm. So that's volume. Right. It's just more shit to think about. So I got to get really clear now here on what am I trying to do. So I already know at this stage that I'm not expecting to win every trade. I might, out of 100 trades, if I can win 30 to 40 trades with enough asymmetry, like a 1 to 4 or 1 to 5 R multiple, then damn, that's really good, right? Anything above a 1 to 2 is pretty damn solid. Anything above a 1 to 2 and then I win enough times is pretty damn solid. So, how do I do that? How would I accomplish that task? Okay. And this is where I am right now. So I'm thinking, got to use the Fibonacci tools, got to do all that stuff. And when I'm using these tools, I need to think less. Less is more. Darvas boxes, I use Darvas boxes to tell me where trend is. It helps me stay to the right and not get lost in all the shit that happened back here, because that can really mindfuck me. And obviously I have to accept that I'm not going to win every trade. I may lose every trade. I may even miss trades. But the thing is to trade what I see and not what I think. So always at the higher time frame, we must be thinking with these boxes. That's just undeniable, right? Now, over here though, this is the next challenge. The next challenge is this. It's this 1 day candle. This 1 hour candle. And then there's also this too, 1 week, daily, and 4 hour. The 1 week, the daily, and the 4 hour right here. I think that might be too far out though, to be honest. I think this may be the sweeter spot. Might be. And we're just thinking when we go down here, we want to take these kinds of trades all the way back up to the 382 retracement. But even still, that's really risky. Better to just trade with the trend, right? Better to just trade with the trend. What? Trade with the trend? What? Trade with the trend. Okay. Trade with the trend. Trade with the fucking trend. That's all you got to do. All you have to do. Trade with the motherfucking trend. That's it. If you do that, it's going to be all right. Yeah, and by the time we wick into here, to that 1 point, that's already not good. So I want to see volume increasing. Volume increasing as the price goes down. That's already telling me 1, 2, by the third one, trend. See that? Volume is inconsistent here as price is going up. And notice how the bars are getting thinner and more chaotic. And there's a little bit of selling pressure happening here, a little buy pressure, and then this little tiny ass candle right over here. That's what I'm looking for. And then by the time I come all the way down here, I start to see more volume picking up, more volume picking up, more volume picking up. Take the shot. Done. Done. All right. As opposed to set and forget 618 limit order. I could do something like that, right? I could. And then all of a sudden, that trade goes from a 1 to 572 to a 1 to 743. But still, that's not what it's about. It's not about that. It's not about that. It's about at least a 1 to 2, 1 to 5. 1 to 2 to a 1 to 5. That's the sweet spot. Because after that, that's pretty much asymmetric. Don't want to go for any 1-to-1s. And I'm just asking myself, like, okay, how can I make sure I utilize everything that I have here? Right? So that's already 36 days. That's pretty solid. For a 36-day candle, that's really good. That's really, really good. We're out for 1, 2, 3 days. That's already now the formation of a new box right over here. That's really easy to manage. So I just have to ask myself, what is it that I'm expecting here to do? What am I expecting here to do? Clearly, I have 2 kids now. They need their dad and the mom. How can I manage all of this consistently, show up at the right time, take the trade, etc., etc.? I'm not going to take any market orders. That cannot be emphasized enough. Not going to take any market orders at all whatsoever. That's insane. And I'm also not going to trade just one instrument. I'm going to trade a universe of instruments that are non-correlated according to theme. Because pretty much every currency is pegged to a dollar. Pound dollar, euro dollar, fucking, USD. It's all connected in some way, right? And there's relationships, right? Like if there's a war in the Middle East, there's very likely to be oil shortage. So that means that the price of oil may go up significantly, right? Because there's not enough demand. There's not enough supply. There's not enough supply for the demand. So got to think about all that. And I'm only looking for one setup. I'm only looking for one true setup here. Notice how the volume is getting inconsistent. So we would just basically just hang out until the price gets to 382, and then we just start stalking, basically. We just go down to that lower time frame. Hopefully it gets up here. Well, that's the thing. We don't know. We're never going to know if it's going to go all the way up here or whatever. But the idea is to make sure that we take it in the direction that it's supposed to go in. So if it comes all the way up into here, then obviously I want to take the trade here. If it comes into here, right. If it comes into here, I want to make sure that I have a stop sell order coming into here. And then this will be my stop loss, basically, Now the question is, how often am I going to get that? And can I make sure I get that enough times? That's the idea. That's the idea. I want to make sure that the trade, well, then I'll be using 2 indicators, right? As overlap. Like this is a textbook entry that I would want, for sure. That's a textbook entry I would want. And at each of these candles, maybe, because at each of these candles, right, I need to think my money is going to happen here. My money is going to happen here. It's not going to happen in the range. My money is going to happen on the breakout. So I need to be able to catch the right move up here towards the top of here, like right over here. This will be basically what I'm looking for. And the point of control at this box right over here, that's the move I'm looking for. That's the move right there. Okay, that's it's very strong. And that's what I want to take all the way down. Okay. So I would have to say, could be waiting 30 days for this thing, or anything over 20. Anything over 20 for sure. It looks like that's pretty valid. Anything over 20 on this one. For this specific type of move, that would be the thing. You break through here with strong volume, that's a good sign. That's a really good sign. Huh. Look at that. Anything through the point of control there. That's the trade right there. Is it not? Trade right there. Yep. That's another opportunity right there. Yep. Well, just leave this up. Don't fucking delete it. Don't delete it. Don't be an ass. Don't delete it. Just fucking leave it. Because I got that tendency. I have that tendency like an ass. These are a lot of candles. 133 days. Too long. Too long for me. And I need enough opportunity. I need enough opportunity to do it. Yeah, I would say. Yep. If I were to take this candle, I would have gotten stopped out here. For sure. But with that 4 hour, I'm good to go. Get that little extra buffer. So I think 4 hour or the major time frame, it's not necessarily the major time frame, it's the time frame that you use to adjust or to take your positions, right? To determine where you're going to take your limit orders. And then the lower time frame is moving the stop loss down. So trade management. Could I have said the same thing here too, right? I could have said the same thing here too. Same shit. Right? But you're taking more of a risk, I think. I think you're taking way more of a risk by just going off of that lowest time frame. Like, sure, yeah, I could have done that too. You know, I could have done that too. But over here, more volume. Boom, stop limit, you know? Target 1. And then from here, target 2, target 3, right? Could have done that too. There's many different ways to do it. Many different ways to do it. All right, break. Okay. My question is, what's going to fit my lifestyle? What's going to fit my lifestyle? This gives me more time to think. But yeah, but if you think about it, like this is just one market, honestly. What if you have 100 markets? You know, like really think about that. Okay. So this is where I am right now. We had previously discussed trading timeframes and the Van Tharp philosophy or approach to trading. And one of the things that Van Tharp emphasized is creating a trading system that fits you. And so I'm looking at the charts right now and I'm oscillating between the 4 hour only and the 1 day, 4 hour, 1 hour time frame. I think the weekly, daily, 4 hour may be way too long. And when I look at the daily, 4 hour, 1 hour, there's something that makes a lot of sense here with this. And I'm not trying to be biased. That's not my approach, and I don't want you to be biased either. But I'm just looking at this very neutrally according to Tharp. He mentions frequency is a big variable in terms of the trading system. But he also says at the same time too, the reliability of the system is also very important. Period. In one hand, he says entries are not important, and he emphasizes that exits are important, he says entries are not as important as exits, and that even with random entry, you can make money as long as you catch a trend. So we have charting software in the year 2026 that I don't know if Van Tharp even had 15 years ago. You know, when he wrote his books, a majority of his books, which I think were in like the early 2000s. So I understand from his perspective, he sees it a little bit more on the old school side, period. And yet at the same time too, from Nicholas Darvish, we can conclude that in his era, he very likely was only just trading off of the daily time frame, period. So this is where I'm stuck right now. And I'm trying to figure out like what's really going to fit my lifestyle. I've got 2 kids. I'm working. I've had the time from 7 to 11 to look at the charts, to make decisions, and to set limit orders or stop orders. There's not a chance I'm going to be taking market orders at 11 o'clock at night. That's just not going to happen. Period. So that's out of the question. But I'm asking myself, if frequency really does matter that much, what am I going to do here? Question mark. And so, like I'm asking myself, do I compensate by adding more size to a position? Or do I get more instruments? And if I can get more instruments, is it really a possibility to get maybe 50 to 100 non-correlated instruments so that way I can meet my quota of taking 100 trades in a month? Question mark. Let's see what it comes up with. Because that's the thing. For the Van Tharp stuff, he emphasizes that frequency, the opportunity, he calls it expectunity. How often does that trade come around? How often does that setup come around? How often can you take that specific trade? And for me, it's not often, right? If I go from the daily 4 hour, 1 hour, it's not going to be often. I'm looking at maybe once a month. So I really got to make sure I'm good to go. But is that really a bad thing if by the end of that month I find 100 trades, you know? Obviously, yeah, we don't want to increase size if there's no edge because it's only going to magnify it. Yep. Okay, why 50 to 100? Okay. Yeah, I'm not going to take market orders. Nope. And also, where is it like law that I have to do 3 time frames? Some people do 4 time frames. Maybe I need to just do 2 time frames, you know? So let me think about this. Let me really think about this here. Because it could be either the 4 hour or the 1 hour. Right, where I'm oscillating between, okay, well, I see this here. Let me go down, see what's up. Take this trade. For example, if I saw the price coming back here, I could literally just see this. And do this all the way to here. That's a 1 to 3. That's very simple, right? I could do that too. I could not do that if I was just thinking, oh, 4 hour, 1 hour, right? And even still, would I see you know what I'm saying? Like, would I see the thing though? The answer is no. I would not see the thing. I would not see it. Still a 1 to 3. It's still a 1 to 3, however you put it. I'm not going to be putting up boxes on the lower time frame. That's insanity. I'm not going to be trading off of that 1 week. That could take a long ass time. I'm still going to keep the fucking trade chart up on this time frame so I can study if I need to. But still not from here. This is where I'm stuck. This is where I'm stuck. Even if I go down to a time frame like this, you know, even if I go all the way down, 4 hours. Sure, you can trade, maybe. If you want to take market orders, right, you could have done that too. right? From the 15-minute time frame. But is that worth your time to go from here to here? I mean, that's the 10 hours, bro. You're not going to beat that 10 hours. That's 1 to 6. And what am I looking for? I'd have to be looking for like a break and retest. Yeah, even still, I would have to see this closing at a specific level to say, okay, that's closed out, you know, that's closed out bullish at this specific level. Okay, now let's go down to the 1 hour. I could do that too. And I can just be like, here, go to 2 levels. Right? Or go up to here or some shit. I don't know. And again, you do not want to swing trade against the market if the direction is notoriously down. That doesn't make sense. And if I was here, let's go to where the original trade would have been. These 3 candles right here. Okay. Now let's go into here. This is the original band, basically. This is the 3rd candle outside the box. Okay. So after these 3 days, it would be fair play to start trading again. So I'd have to have a 3-day cool off. A 3-day cool off by the time a new box gets created. And I want to see a range. I don't want to see a new box getting formed. I want to see the same thing. Okay. So let's go back down here. One, 2, 3, here. Okay, go down. So after this, I need all this data to load to say, okay, this is what I'm doing here. This is what I'm doing here. I'd have to set the alert here. Not really. Man, anything after here? This is 3 days. 3 days, right here. Officially 3 days. We don't want to take it here. We want to take it towards the top. There we go. Here, back to the point of control as the minimum first target. Because by then, here. Okay. So by this time, I would need this. 50% here, 50% here. 50% here, exit here. Let's see. That's a possibility. Possibility. Question is, did we touch? Yeah, we did. Okay, cool. So we made the trade. Okay. Possibility. Possible. Not absolute. Possible. That's where I can see multiple time frames coming in. Okay. That's where I can see these 4 time frames coming in. So that I execute from that 15. Because think about that. If I literally just held this all the way down here, 1% or 2%, that's already passing phase 1 of that prop firm challenge. That's it. And all I needed was 3 days of work. Take the band back down to the middle. That's pretty simple. Right? But that's, again, counter. That's counter trend trading. Versus okay, let's see the Duomo levels in the direction of the trend, in the direction of the box, in the direction of the thing you're going in. Right? So let's see here. In that direction. Right? Let's see. Yeah, but even still, you see, that's the thing. That's the thing where you just fucked up. Because you want to think here. That's what you want to think. You want to think there. That's your only move. That's your only move right there. That's it. This is the bottom of the box. Go all the way up to here. There you go. That's a possibility. Right. By the time you get to the next one, oops. Yeah, you got stopped out. from here. Okay, what would you need to see from here realistically? If let's say my stop loss was at the point of control, would that have made a difference? Let's see. All right, you see that's the thing too. Like from here, if we know that we're on the downside, yeah, that's the thing. You can be trading those levels very easily. And look, that got you stopped out. That got you stopped out. So better to say when it comes through here, go up with a limit order. When it goes all the way down, when it crashes all the way down, do the thing where you just take the limit order from one end to the other. Let's see what we'll come up with now. Ugh. Done. Hold on a second. Okay, here's what I'm seeing. Here is what I'm seeing. 7 days to get that. Do we want to do that for that kind of an entry? You know? And this actually is kind of good because now it tells me, hey, we don't want to be extending the channel, actually. We want to keep the channel where it is. Keep the channel where it is. That's big. That's a really big, important understanding. Because at the daily level, like this is a lot, right? At the daily level, this is a lot. But now we want to be thinking extremes. Always think the extremes. Always think the extremes. Where does the box extend? All that shit, you know? 3. Boom. All right, that's the new box that is formed. This was the original. This is the original box. I know that. And then this is where we started extending. The point of control extended more. So if anything, you can always still say, hey, take the trade from here, here. And if we fail, we're going to go back down in reverse to 1618. Or to this guy right here. So target here. Now I'd say it's the first target here. Okay. That's a bit to take in. But I do think that makes a lot more sense than if I were to use that kind of a time frame signal. Break. Okay. 4 time frames. That's interesting. 4 time frames is very interesting. By that time, though, if I'm at the 1 hour, that would probably be it, though. That would probably be enough, to be honest. That would be the only reason. Yeah, that would be the only reason. And that's about it. No, when it's above, you want to think go below. When it's below, you want to think go above to the point of control. Mean reversion. So do the opposite shit. Especially if you're using the daily time frames. For me, that's the way that I think. I want to be doing the opposite of what a lot of people are doing. I want to do as much of the opposite shit as possible. But then you'd have to wait for this to confirm with 1 bar. You know? Think about that. So I would have waited up until here. That's 10 days. Yeah, but still, I mean, think about that for a second. 10 days regardless to take this kind of a trade from here to here. Pretty big deal. And you still have your stop order. That's Friday. That's by Monday. And then you can always come back down. Okay, interesting. So regardless, I want to be thinking then here. I want to be thinking a stop limit order here. And fucking something like here. Or even here or some bullshit. That completely kills the risk reward profile, but yeah, that kills the risk reward. Fuck. Yes, I accept that I'm going to lose some trades. I accept that I'm going to win some trades. I need to think about what's going to fit though. What's going to fit my life? That's the key. What's going to fit my life? Because clearly from here to here, even from here to here, look, even from fucking here to here, look at this. Look at this. Look. Just here to here. So 1 to 2. That took 3 hours. We can do that. So the minimum is wait 3 days. That's for sure. The minimum is wait 3 days. 3 days, 3 candles. We need to ensure that the candles stay outside and then we have the box, right? I don't want to be trending. I don't want to be trending. I don't want to trade a trend setup. Obviously, everything trends, but that's relative. If we have a range here at the daily, still, if you go down to a lower time frame, there's a fucking trend. There's a trend regardless of where you are. Doesn't matter. It does not matter. So just think literally from top to bottom, trade it. Trade it. Just literally think that. Let's get this channel going here a little bit cleaner. There you go. Nope. No, keep it simple. Keep everything simple. That's not simple. Keep it simple. Yeah, possible. 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 Right? Because this is basically like your zone. This acts as your zone. So I don't need a zone because this acts as my freaking zone right here. Done. So I can already predefine that very clearly. Yep. Candle open, candle close. Okay. That's important. And then obviously the news will be the catalyst to fucking move the trade in whatever direction it does move it in. All right. So if I go over here, I'm expecting retail sales. Okay. Let's see. Okay. Getting closer. Retail sales is at what? 8 o'clock. Okay. This is the 7:15 candle. So 2, 3. And then this is the 8 o'clock right here. What happens? After the news comes out, actual was 7, forecasted was 2, previous was -6. Okay. Done. So I know that once the candle breaks the box, I gotta wait 3 days. By this time, I'm now thinking, okay, this is the third candle outside the box. right? Okay, that's good enough. So I have to really rely on the higher time frame just providing the structure. One of these time frames to actually legitimately provide the trend Right, we started off here, but the box kept extending. That's the thing you gotta understand. The box kept extending. Like if I was here in real time, this would be the box. But we closed back in, so the box extended, right? And now from here, what do we see? Rising volume. So this could have been a possibility here, where we now go down to the trend. Yeah, this is the hardest part right here. This is the hardest part right here. We have higher volume, right? So anything after this is where we trade, right? Okay. Could say that. Could say that. Not saying that you have to say that. You could. Yeah, but why am I not seeing the other Fibonacci though? And then even simpler too. Well, by that time, you don't want to take it. Well, you're officially back in. There you go. That's the thing, that 4 hour is already serving your confirmation. So now go down to that 1 hour. Now there you go. There's your answer right there. If you keep it really that simple, that's your answer. Wait for the price to close through here, come back in, take the trade back up. Target 1, target 2, exit by that point. Done. That would be the easiest thing to do. That would be even easier to do as well. It's 14 days. And then we say after 20 days, what do you say? We have significantly more volume over here. It's not necessarily a bullish engulfing, but what I would say is what? Obviously, that's curve fitting. That's curve fitting. Expect to lose, though, which I'm all right with. I'm all right with it. Okay, done. Lost. Next one again. Lost again. Lost again. Got him. Okay. That's what we need to look out for. Okay, so expect to lose like 3 or 4 times, right? Expect to lose a couple of times, which is fine. It's really not a big deal. That is really not a big deal. So quite simply, after 3 days, I want this, target 1, target 2. Target 1, target 2, same thing here. Target 1. Yeah, don't tell me that that's not enough. Don't be a fucking cock. Don't be a cock. But you could do more. Yes, yeah, sure. Sure. Whatever you say. Whatever you say. Target 1, target 2. $20-day mark. Right. And even still, look. If I were to say target 1 right here, you're still going to get it though. Right? By that time, you move the stop loss into entry after target 1. Close through, come back, pop back in, stop, sell, stop, buy. I think this is it. I think this is it, and there's no need now for that 15-minute time frame. There's no need for that 15-minute time frame then. And I think honestly, This is where I would leave off at. Yeah, I think so. This for me seems like the most comprehensive, and this is like hella easy to do. Just do that. Just do that. Just do that. Don't need to make it anything more than what it is. All right. I need to record the video now for the day, and then I'm going to take my son, so I got to take a little break. But I will be right back to check this out here. Break. All right, back. All right, cool. Now from here, now that I have Regis with me, I can work as long as I need to. I just got to edit this video now. Let me do that now before I forget. Almost at the end. Tired of this thing. Let's finish this up. All right, this is where I now am with this. So while I did that video, I thought to myself, okay, there's something else that I'm missing here. And the possibility is that we use time as well. So we not only use the vertical axis, we also use time. So we also use this to our advantage. And I think that after like 10 days, that's when we're thinking, okay, this is fair game here. Break. Okay. I would say so. I'd say that we need 2 barriers, right? After 3 candles, third candle outside the box, we've got that. Okay. Where's the target, man? The bullseye emoji. Come on, can I get the bullseye emoji, man? Okay, so that'll be like the real thing. This will be the back tester. Okay. And I think that's the best way that I can see this right now from this angle. Okay. Done. Okay. Let's sit down because it's getting hot. So now let's think here. Now let's think, because from here with the charts, now I need to think about backtesting all of this. And I need to define the rules here. Okay? I need to define these rules very carefully. So, the best way that I can think about this is maybe like after 10 days, that's when a range forms. Because over here, when it was the 10th day, what wound up happening, it was fair game. So I need to wait for the price to get into a 10-day mark. And then by then, I can take that trade. I can think about taking certain trades. After 3 candles were fair game. And we want to think about this as the original structure and just trading the extremes of this. That's it. That's all I want to do here. Go the opposite way. Support, that's resistance. Go the opposite way every time. So let's go higher time frame channels. Yep. I needed to get into here. That's the idea. So you would need to set a alarm. Yeah, we're setting the alarms from here. Mm-hmm. That's a bearish engulfing. Mm-hmm. Okay, so the major time frame is just for seeing volume. So let's write that down. The 1 day, which is the highest time frame. Honestly, I think you could technically do it with 2 time frames, but I think it's also pretty clear too when you can see like the false breaks through here. It's very, very clear. I can see the false breaks through here. Ooh. Like if I'm here, what do I see? I see a wick. I see a wick up here, but I don't see what? I see a wick over here, but I don't see the candles, right? That's what you have with the exactly. I would have to say that I need to see the candles close through officially then. I need to see a candle close through officially and not just think arbitrarily, oh, just because it was like this, I'm going to take the trade. I cannot do that. I could say this, right? I could say something like that, but then if I have my stop loss here, that's going to really like destroy the R multiple. Yeah, exactly. So it's not even worth it. It's not even worth it. So I need to see at least from this time frame, the candle close above and close through. This is 3 days of data. This is exactly 3 days of data. There we go. That's what I want to see. I want to see this. I want to see this. I want to see candles closing underneath and then popping through. That's what I want to see. That's target 1, target 2 right there, done. That's where I want to really trade from. That's it. That's the move. I want to see candles close out like this. Basically. There you go. His head needs to be supported. So hopefully that's good for him. He's a good kid so far. He's a good kid. Gotta keep him that way. Yeah, and I could even see it too on that 4-hour time frame. So that's what I want to look for. I want to look for the original parallel channel to close through here on the 4-hour time frame. Right? I want to see the volume. I want to see decreasing inconsistent volume. That's less volume right there. And then from here, what I want to do is I want to go down to that next time frame. Okay, look at that, look at that, look at that. Look at that. Very simple, very simple. Look. Very simple. I basically want something like this. I want the false break at the 4-hour. So the 4-hour time frame is going to go for volume. Right? So 4-hour time frame is volume. Where's that text? There we go. So the 1 day is the highest time frame for the structure. And that's going to include boxes, channels, Fibonacci, etc. Okay? That's good. The 4-hour is going to tell me here what's the problem. Okay? If there's a volume anomaly here, that's what I want to see. That's a big one right there. Then from here, I want to see candles closing out like this. And I want to see the price coming back into here. And I want to trade here. I want to trade here. Target 1, target 2. That's clean. That's really clean. And all I gotta do is just go down here. Right? I don't even need to go down here, honestly, if I don't want to. Look right there. There you go. That's target 1. Target 1. Move your stop to your entry, basically. I don't know if I'm gonna get stopped out though. Boom. That's it. Right there. So that's it. It's target 1, then move stop to entry. That's it. Target 1, stop to entry is target 2. Done. And then after 2 days, if we get back up to here and setup started on the 1 day time frame. The setup started on the 1 day time frame. So I want to make sure that if the setup started on that 1 day time frame, does it close? If it does not close, then there's no trade. Look at that. Test, test. Now we can go back down here. Even still, that's what I'm thinking. That's still what I'm thinking. Regardless, I still want to take the trade like this. This is really good. This is really good. So every single time that the price goes through here, I need to think, set another thing here, basically. I get stopped out here. That's fine. I get stopped out here. That's fine. Right. You need to see candle clusters through here. That's what I want to see. I want to see candle clusters through here. Not just automatically in and out. Not like that. I want to see this, basically like a couple of candles, at least outside of this. Right here. Like right here is good. And then from here, I take this. And then you got target 1. And then you got target 2. Done. That's fucking easy. That's really easy. Come on, man. Target 1. Target 2. But still, how do you explain that you're gonna go to 618? That's what you want to do. You want to get to 618, which is up to here. That's what we're going for. So it's 3 targets. It should be 3 targets then. Look. 3 targets. Target 1, target 2. By the time we get to target 3, obviously we want to close this out. Right. Shit. So we definitely want to think a majority of our position, we want to let it ride as much as possible. Target 1, target 2, target 3. Yeah, that's good. That's good. Like that. I like it like that. I think that's gonna work for me. Okay. Alright, so this is the back testing chart right here. Okay, baby. Let's go. Let's go. Right. That's what we want to think about here. We want to think about that right there. And then after that, that trade is done, man. That trade is done. So that's target 1, that's target 2. And then target 3 is going to be up here. It's going to be all the way up here. Right. That's going to be the simplest thing to do. It's going to be the simplest, in line with the trend of the fucking boxes from the daily time frame, which is here. That's it. That's all we're going to do. That's all we're going to do. Green. I said wait for that range. Trading with it. Trade with it. Obviously, we can see that there is a volume anomaly here. And we're going to wait for the failure. But otherwise, we're down here. this is it. This is it. This is it, though. I want to really revisit this right here. Because this is probably going to be my money right here. I think that's going to be a good one. And I got to wait for 10 days. Right. Right. We got to wait a few days here. Okay, fair enough. I like it. I like that way better. I like that way better. Because look, we already hit the take profit. We already took our stop. Mm-hmm. Right. And then after like 30 days, you could be thinking, oh shit, okay, yeah, I'm going to hold this thing. Yeah, I like it. Mm-hmm. I would definitely, I'm, fuck it. I would lose these two trades for this. 100%. You better believe it. You better believe it, but alright, so it should be. Alright, that's gonna be it for today. That's gonna be it for today. We're gonna call it a break, but we're gonna go back and revisit this. We're gonna go back and revisit this one. Alright, that's it, done.